Good morning, everybody. Welcome. We are live. So, before we get started, please read the disclaimer. I am not a financial advisor. I am certainly not your financial advisor. Please do all of your own due diligence. Please utilize this video and all videos going forward for educational and entertainment purposes only. With that being said, let's get into it. Still figuring out how to protect my voice. Somehow last week I kind of lost my voice. Weird thing, it came back on Saturday night as the Chicago meetup was happening. So, first, before we get into the markets, thank you to everybody who came to the Chicago meetup. It was an incredible event. Thank you to Angelo, Jess, and Amit for putting it on. It was truly wonderful. This is the third meetup that I have gone to, and they are all incredible. Everybody who I met was incredibly great, and I think we all had a really good time. And I'm going to have to get somebody back because there's somebody in the chat who got me something that is going to end up going on the wall at some point in the next several weeks. And I'm going to have to figure out how to get her back. So she knows who she is. She's in the chat. Don't worry. I'm going to figure something out. I will figure something out because the community's got a lot of jokes, and I'm truly thankful because that's what makes the community completely amazing. Looks like Hollis is recovering. He's here. Chels is here. What's going on, everybody? Rusty is here. Gonzo is here. Thank you, everyone. And I know that we missed the members only call. I was so shot yesterday. I ended up going to sleep at 10:30 last night, and I didn't wake up until about 9 this morning. So I was running on about 7 hours of sleep for the weekend. Not good. Tanner would be very, very disappointed in me. So I am thinking tomorrow night we have the members only call from the weekend. I will look to schedule that soon and get it going. All right, let's see what the markets are doing. Feels like chips are still running wild. We have the S&P making new all-time highs, 74.20 for everybody that partakes, 420. Anyway, S&P is trying to make me not a liar. What's interesting is we are getting there with the oil markets at increasingly high levels. WTI is up $1.95. We are at 97.37. Brent, 103.52. I think this goes to show us how resilient the American economy is, especially with oil where it is. I did not think we would go over 7,400 with oil near 100. We did. We absolutely did. I still believe we get S&P 8,000 this year. We will see what happens with that. So let's get into individuals before we start going into everything else. Technology is running. Energy is still going up, and that's to me a good sign that if energy is going up and tech is going up, that kind of means there's not a rotation out of energy into tech, which I do think is going to happen in the future. Real estate's up a little bit. I'm going to have to look into Realty Income and Starwood to see what they're doing. But Rocket Money, 119.35. The party's not stopping with Rocket Money. Congratulations to the Space Mob. And I know that ASTS was the original Space Mob ticker. We're including Rocket Lab in there. So congratulations. You guys are killing it. Nebius wants to take out 200. Nebius wants to take out 200. Incredible. I'm in it. I didn't buy enough. Congratulations to everybody that's in it. Next decade's up a little bit. Micron, can't stop, won't stop, 784. It can't stop. It still looks cheap on a forward basis. NVIDIA, finally breaking out. NVIDIA is finally breaking out. I know it doesn't feel like it's breaking out because it's 221, but it is at pretty much all-time highs. It may be lagging a little bit. compared to a Micron or a SanDisk or even what an AMD did. But I think this is a really important level. I'm expecting them to blow earnings out of the water. If they do, I would not be surprised. If they jump to about 235, 240, I also would not be surprised if we get a sell off in this rally and NVIDIA comes back to around 200. I'm very happy, though, that NVIDIA is taking out its previous highs. Tanner about to retire with Tanner's already retired. He just does this for fun. We got Reddit coming back a little bit. I'll be making a video about my 5-day trade and what is happening with Reddit later today. Hood 78.92, Exxon, Chevron up a little bit with oil. Tesla's breaking out. Tesla is breaking out 437. Enbridge, love Enbridge, is going up. SoFi is still lagging around 16. Tommy Dimes' favorite company, Cisco Systems, $98. Nobody wanted to listen except for Tommy Dimes when it was around 40. We have Cisco trying to take out 100 on a split adjusted basis for the first time ever. I think it's going to happen. They report later this week. AMD 460. I mean, it feels like the chip rally is becoming an everything rally. ServiceNow 91.65. We got the SPY doing well. Cloudflare is trying to come back a little bit. Apple flatlining. ARM Holdings not really doing much. Let's look at the losers. Got Amazon pretty much flat. SanDisk, I wouldn't even call that a loser. Microsoft, I'm surprised that it is not going in the opposite direction. Same with Meta. Meta's just trying to hold 600 at this point. Pretty crazy. Alphabet's giving a little back. Oracle's giving a little back. Salesforce giving a little bit back. Palantir, we have a problem. I made a dedicated video on this. I think Palantir trades between 100 and 150 for quite some time, and I think it's just going to flutter around. Two big ones, Zeta not cooperating. Iran, down 5%. It was down more before. We'll get into why. So let's look at Iran real quick, because this is what was dominating the headlines earlier. Iran sent a new proposal to the U.S. over the weekend, centered on ending the war on all fronts and lifting sanctions on Tehran. But President Trump said it's totally unacceptable, rejected it outright. Iran's foreign ministry person called Tehran's proposal generous and legitimate. Here's my question. Who the hell are we negotiating with? I keep saying this because I have no idea who we are actually. Okay, I'm going to stop that thought. We're going to move to CNBC in a minute because one of OpenAI's people is going to be speaking, and I want to hear what they say. I do want to know who the hell we're negotiating with. We are getting to my cutoff range. My cutoff range is Memorial Day, where I said that this needs to be over by. The April 8th 2-week ceasefire is about to be done. I mean, this is just the naval blockade. I don't even know. I don't want to think about what is going to happen if we just don't get a deal. I think that we have to get a deal on this. And 20% of the global energy comes through that choke point. We are going to see if this does not open, supply start to dwindle and demand outstrip it. That is not going to be good. Oil at 100 is not good for CPI. Now, we're going to get CPI tomorrow. The estimate headline, 3.7%. We're seeing the print run up. It was 3.4% last month. Now, keep in mind, CPI is on a month laggard, which I don't even understand in today's day and age with all the technology, why we can't have real time. But CPI is on a month laggard. And I had said before, when we get to May, because it's a month look back, if oil does not correct, we will have a 4 handle. I think that the estimate headline at 3.7% and core stripping out food and energy at 2.7% proves my theory. Now, if we go higher than 3.7% tomorrow, I think that we're going to get a pretty big sell off. And we're going to start to get fears on inflation rising above 4% and energy starting to become the real story. The Trump administration cannot let that happen. It is a midterm year. I don't think that they are going to let this go through the week. I've been wrong currently because I thought that it would get done around this time. It obviously has not gotten done. Oil is still near 100, which is not good. And this is going to impact the Fed leadership transition with Warsh coming in. The Fed's going to have a really hard time cutting rates if we have inflation going back and forth between 4 to 5%. And tomorrow is a critical day with these numbers. And if core breaks above 0.0% month over month, in my opinion, that's a signal that energy price gains are bleeding into non-energy categories. And I think it's going to kill the idea that we could get 2 to 3 rate cuts in the back half of the year. I think that we really need to have a deal on the table and see oil get under 80 for any hope of a rate cut happening. Thank you, everybody, for being here. What's going on, Kyle? Ray is here. Ray, I hope you and Michelle had a great weekend for Michelle's birthday weekend. Yes, I agree. No deal without all Iranian nuclear material. I get it. I know that that's probably what they're holding out for, and I don't know if we're going to get it or not. We will say. We will absolutely say. I did see the photos. Those wings looked amazing. I did see the photos, Ray. I did. A little jealous. Little jealous. Wish you guys were in Chicago with us, though. Joey, I don't know that we're in an asset bubble. I really don't. The market is up because corporate earnings are up. Now, I know that it feels like we are in an everything rally, but we're really not. And look, there are things that are expensive, but most of this is driven by corporate earnings. And we always have markets where things are expensive. So I'm going to cut over. We have a CNBC exclusive, then I'll continue the CPI stuff and go on that rant. So give me one moment. Let's cut over.
AI engineers into OpenAI. Joining us now in a CNBC exclusive interview is OpenAI Chief Revenue Officer Denise Drescher. Welcome to the show, Denise. It's good to have you.
Thanks, Sarah. Good to see you.
So good to see you too. So I guess I'm just wondering why you had to create a separate venture with some of these private equity and financial services companies to get them to use OpenAI if adoption is growing so fast anyway.
Yeah, well, listen, we are very excited to be launching the OpenAI deployment company today. I think we're at a tipping point relative to where we are with enterprise AI adoption. When you think about the speed of innovation around the models and the capabilities, but really bridging a gap between the way that enterprises are able to deploy this capability right now, it's really a lot for them to process and to take on. And so even when you think about our most recent model, GPT-5.5, by all accounts, widely adopted in terms of our enterprise customers. But yet, Sarah, I still talk to CEOs all the time, and they say that they still have trouble keeping up with the compounded innovation. The good news is they want to transform. They want to bring AI into their organization, not just to try it, but to truly transform these workflows. Think about the complex workflows, about how you actually build a product, service a product, market a product. And this structure of this company is going to allow us to do that at speed and scale. Very simply, it allows us to increase the amount of forward deployed engineering capacity that exists to allow companies to do that. So forward deployed engineers can sit with an organization, sit with their users, understand the workflow, and then help them take that capability from their back office applications, connecting it to the model, and then really building intelligence in terms of each of the workflow. And we think that this unique structure allows us to do that at scale and really focus on doing this with an operating model, which is majority owned and operated by OpenAI, but allows us to do that in a more focused manner to execute against that at speed and scale.
So it sounds like it entrenches you guys more into these businesses and these companies' businesses. And I just wonder how that helps you. I mean, I'm sure competitively, as Anthropic's enterprise adoption grows as well very quickly.
Yeah, I mean, what we think about is we're really helping companies bridge that gap between this incredible amount of innovation that is happening, how they bring that into their organizations to really deliver outcomes at scale. When I think about the work experience we have had to date with customers like BBVA, working with our forward deployed engineers across massive bank transformation, what they're able to do is bring in the AI capability across hundreds of thousands of employees, over thousands of workflows, and embed intelligence in there, and then they can actually see efficiency. But Sarah, what I think is great about this model is while you're working side by side with customers, they're also learning about the capability. And we're also getting feedback about the product, and they have access to our research, our engineering, and our product team. And it creates a tight loop of not only innovation, but also learning for the customer. And we're really excited about that to scale enterprise adoption across the globe.
So the recent introduction was GPT 5.5, which you mentioned. What have you seen, Denise, in terms of businesses since then, growth rates, adoption on that product and on Codex?
Yeah, I mean, it's really been a really incredible moment for us. We've seen over 1 million companies trying this application, enterprises, in the first couple of weeks, 28 billion tokens generated, which really what I love about it is it's the most intelligent, most intuitive, most efficient model we have released. And what we see in terms of the feedback from customers is the model just gets you. It understands the shape of the problem. You mentioned Codex. I mean, Codex is really having a moment. We've seen the growth of Codex weekly active users move from 2 million to 4 million in just about a 30-day period of time. And it's not just for the software development lifecycle, although we're very excited about what it's unlocking for organizations like Cisco, that's seeing that they can release product and increase their innovation cycle by almost 20%. But it's about really how we automate all work. And if you think about it, anything that you can do on your computer, you can begin to automate with Codex. I use it every day. I created a chief of staff for myself before I was using, before I was using the 5.5 model. It was great. It was great. But when I would ask a question like, what should I do, or what should I focus on today? It would give me a good answer, maybe a summary of what happened, what action items I have. But now with this model that is much more intuitive, as I said, that just gets you, the capability of what I get is, here's what you need to do. Here are the decisions you haven't made today. Here are the meetings you should reprioritize. And I think that's really exciting for thinking about the power of these models and unlocking intelligence across every organization, which again, is what we're really excited about with the announcement of the deployment company to help companies do this.
It's interesting. I was talking to an executive over the weekend who was arguing that C-suites in general, who have taken a more measured approach to adoption so far, are seeing examples like that over the fence at other players. They're seeing some companies lay off 25, 30% of their workforce, and that there'll be a sense in the second half of the year where they lean on their teams to, as he put it, just start breaking stuff. Do you think that desks will get more aggressive on that front in the second half?
Listen, I think that there's an opportunity for every company to reimagine every single workflow, to lean into intelligence and evolve how companies work. And what we're starting to see is the companies that really do lean into bringing intelligence, not just as a productivity capability, but truly transforming those complex workflows across all of the business, are starting to see more advantages. They're learning more about the power of AI. Their companies are adopting the capability and they're becoming more competitive. And I think that's what I'm really excited about, is I think we're about to embark upon a chapter where work is going to be fun. It's going to be more exciting. It's absolutely going to change, but we can see the possibility of that. And I, for myself, when I use the capabilities, I can see how work is actually improving already.
Some of the questions we get from investors around this, as you and others gear up for an IPO, basically the commoditization of these early frontier models, and how much pricing power do you have with so many models out there and with these models changing so quickly?
Yeah, I mean, listen, we are always making sure we think of intelligence as something that should be available for all. We want to make it easily accessible. We want to make it economically available for everybody. And that is part of our focus. And as I mentioned, the GPT 5.5, it really is our most efficient model possible. And we're excited about people being able to do more work with more efficiency in the model. And we will continue to strive to bring even more intelligence as fast as we possibly can and an efficient model.
Sam has been on.
So I want to hit on something that she said, and it's applicable to a lot of the comments that's coming in right now. when we listen to this about how enterprises are really adopting this, GPT 5.5 being their most efficient model on tokens, and then thinking about what some other companies have said in the past that their token budgets have completely gone haywire and they had to put real limits on it. I don't think that this rally's stopping. We can get a dip, but when you think about what she just said, companies are at the very beginning of really implementing all of this. And I really do think that the semis are up for a real reason. Photonics are up for a real reason. I'm not doing the DD on photonics. I'm not going down the rabbit hole, but I do think this is an everything rally that has a lot to go on. I think that we could see some volatility. A lot of people have made a lot of money. I think we could see some profit taking. At the same time, I do think that as companies really start spending, and that's the inflection point that I think we're at, this could go, and I don't know that enough people are putting two and two together or thinking about it this way. We're about to hit a point where this is no longer a rally just from CapEx being spent. I think that this is going to be a rally because the CapEx doesn't slow, but what we're going to see is huge budgets from enterprises going into AI for token budgets. And I think that's going to be a real line item. Anybody who is in the chat that runs a department or runs a company, you have annualized budgets, you have variance reports, and in the line items, I think that you will see token budgets in there. And that's going to be huge for OpenAI, Anthropic, Alphabet. I know Alphabet's working on a new agent. Obviously, we haven't got Mythos yet from Anthropic. GPT 5.5 is out there. And this could be the beginning of a very long, sustainable uptrend. Oh, Michelle is here. Michelle, what's going on? Happy birthday again. Parzival, what's going on? Pleasure meeting you this weekend. So OpenAI, I think that this is very beneficial to the market. I do believe that we are going to see a lot of money running to these companies, not just in the subscriptions per seat. And I do believe over the next several years, and we'll see it in the numbers when these companies go public, the way that we see SaaS numbers reported per seat, I think that we're going to see two very big things. We're going to see OpenAI and Anthropic in a war for per seat, but also for the tokens utilized through their dedicated APIs, because there are just things that you can't do with the monthly membership fee that you pay. There's just things you can't do with that. Now, I'm not in either one directly. I cannot wait for them to IPO so I can buy both of them. And I do believe that we are going to see a lot of tokenomics happen, and that should be very good for all of these semiconductors up and down the line. I don't think that this is a rally that gets faded. Yes, it can go down. The unit of economics are a tailwind, not a headwind for the semis. I think this is golden age of technology. And I don't want to really hype it up to sound like, man, this is a top, because look what happened. This is not the dot-com bubble. I'm not sure why Tom Lee is saying 20% drawdown. I'm certainly not seeing that anywhere, especially when you go through all the earnings reports. When you go through all the earnings reports, it seems like we are the greatest companies in the market are generating more earnings. And it's very hard to have a huge crash when we did not go down more than 10% from oil going over 100 and the strait being closed. Now, is there a scenario where we could? Absolutely. Oh, Corning, listen, I've been a Corning shareholder for quite some time. I'm a big Corning fan, and I think Corning's going to do very well. It's a great company. Here is what we need to worry about. Look, as bullish as I am, and keep in mind, I am a self-admitted permabill. Okay. I am a perma bull. There's no question about that. But I am a realistic perma bull where I understand that we can get a bear market at any time. I understand that things can go down and sell off at any time. The reality of the situation is that every bear market that we have had has gone bought up. And whether it takes a month, 3 months, or a year, we end up better than we were before. The American economy is incredibly strong. The companies that are powering the American economy are the greatest companies in the world. The American economy is powered by Amazon, Alphabet, Microsoft, Meta, NVIDIA, AMD, Apple. I mean, these are the greatest companies in the world. Coca-Cola, Pepsi, Walmart. I'll throw Costco in there, even though I dislike the valuation. What we have built, Exxon, Chevron, American ingenuity, American engineering is exceptional. Now, we could absolutely see a downtrend if this scenario plays out. Hypothetically, we don't get a deal. Hypothetically, inflation runs over 4%. Hypothetically, we run hot into the summer and we get a 5 handle at some point. Because keep in mind, the March number that we get, or the March number that we got at 3.4%, did not include, I don't believe, more than 10 days of oil over 90. The April number that we are about to get tomorrow, because the inflation print is a month backwards, pretty much the whole month was 95 and over. We're about to see that, I mean, the street's expecting 3.7%. We could get higher. If a deal does not get done, when you combine April into May, in June, when we get the May number, I mean, we could get 4.5%, 5%. And if we get that, that could be a huge deterrent for the market. That could be a sell metric. I mean, we could get a sell metric tomorrow for all we know based on CPI. So keep in mind, this rally could get faded tomorrow, depending on what that number is. We need a deal. We need oil under 80. 80 is the key metric for us to keep on the front and center, because it sets the stage for the summer and the rest of the year, because you have Warsh taking over. And for Warsh to convince everybody else that cutting is the right path, we have to see that inflation is going backwards, not forward. And if inflation hits over 4%, whether it's tomorrow or next month, and then we head into the summer with a 5 handle, you can't really make a case that we should be cutting. Even though I do believe rates at 2.5% is the best number and not to tinker with them unless you absolutely have to, it's going to be very hard for him to convince other Fed members. And if we don't get those rate cuts, we may have topped or hit the top of the S&P today. I don't know. A lot's going to happen in the next month and a half, 2 months. And that's going to set the tone for the back half of the year. What I think is more likely, Iran has got to have a ton of pressure coming in from the rest of the Middle Eastern countries. OPEC is going to be extremely mad right now. Question is, who the hell are we negotiating with, and who the hell are they talking to? At some point, this is going to get sorted out. It's just a matter of, can it be sorted out in a week? I don't know. We're going to find out. So there's two sides to the coin. This gets sorted out. Inflation starts to top out next month and then start coming down. And if we can get inflation down under 3% for August, when Jackson Hole happens, I think they come out of Jackson Hole cutting in September. If we can't get inflation down, I think that sets up a confrontational Jackson Hole event with Warsh and whoever is going to side with him and the rest of the governing Fed members. And then when we come out, we may not get cuts, and we may stall between 7,000 and 7,500, which would still be a great year. Would still be a great year. I'll take any year in the green instead of the red, but it won't be as good as we could have done. And I think that Warsh knows that. I think that Warsh's mantra of being a hawk for so long, I think that's going to change. It seems like he really wants rates lower for the right reasons. And we still have a housing market that's not unlocked. We still have credit that is very expensive. The cost of capital is very expensive. For those reasons, they really have to come down. So we'll see. We will see. The beard is, I I don't know if the beard's coming back. PB, what's going on? The beard is not going to come back. I am going to shave. I will shave. So, do I think NVIDIA is going to run? I mean, I think so. I want it to, but I'm also realistic that it can come down in the short term. Earnings going to be very important. Where is Mad Actual Money? Mad Actual Money is in Europe right now. David, thank you so much for the super chat. Just hit 100K from 30. Congratulations. That's an incredible ROI. Congratulations. Incredible. PB, New York Knicks sweep on to the Eastern Conference Finals. We'll see what happens. A lot of people are thinking that this is the next year. We'll see. I'm not going to start getting excited anytime soon. I can tell you that much. I mean, thoughts on Nebius is Nebius. I mean, what is there really to say? There's so much demand for their products. I think Nebius has the best infrastructure stack out of all three of them. And then you look at Iran dropping today because they announced, and keep in mind, I said that they have to dilute $2 billion convertible senior notes offering due in 2033 with a $300 million green shoe option. The net proceeds will fund all cap call transactions with the remainder of the general corporate purposes and working capital. They may have to dilute more. I'm not sure when. And look, the deal with NVIDIA and IREM was very powerful, but we knew that this was going to happen. We knew that they needed to dilute. We absolutely knew it. I still believe Nebius is the best one out of the three. That's why I'm in it. I'm not in the other two. If IREN starts to come down, I'll probably look at potentially getting in. Maybe I get in all three at some point. I'm not sure. But Nebius is still the one that I really like. Yeah. Trust me, the valuation doesn't make sense for a lot of companies that are smaller. And it is definitely a holdup for me. But, you know, the reality of the situation is that we need more compute. And these companies, if you're thinking long term, if you're thinking 5-10 years, not 6 months, these companies should do very well, especially Nebius. Maybe it rolls back. I don't know. I don't have a crystal ball like some people on X. Can we talk about QXO? I have not gone through the QXO investor relation memo that came out. So I'm not going to address it right now as I haven't read it. So I am not going to talk about things that I am just not informed on. I haven't read it yet. I am planning on reading it later today, and we will discuss it tonight after I can actually read it. Sydney, when was I eating spaghetti and meatballs? And you could have just came up to me. I think I'm kind of not buying this unless you were at the same place we were at, and there was no Kearns, there was no movie scene. So I want more information. I want more information. Oh, don't make me answer this question. Please do not make me answer the Rocket Lab question. I don't want to piss off the space mob, okay? I do not want to piss off the space mob. Yeah, Hollis, I didn't have any meatballs though, so that's why I'm saying I know what's happening here, but I didn't have any meatballs. That was a chicken parm and spaghetti. That was a chicken parm and spaghetti, not spaghetti and meatballs. Yes, addicted to trading meatballs. Yum. I do think meatballs are great, but I'm a big chicken parm guy. Listen, I don't need the space mob coming for me. I'm gonna omit that question, just like it was a question on the SATs. We're gonna omit that question. I think that Micron can keep running. Okay. I think Micron can keep running. I think that SanDisk can keep running. I think that we're going to see Jensen really talk up how powerful the next phase of compute is going to be. Don't forget, Vera Rubin is just coming out. We have so much going for us right now. We're going to, once again, we are going to omit that question as if it was the SATs. I agree. I want all three of them to be public companies. I think it's crazy that they are private still. Absolutely crazy. Who wins off the Clarity Act? I think that Ethereum is going to win off the Clarity Act. And congratulations to everybody in the Space Mob, because Rocket Lab is at 119. Absolutely crazy. Wow. All right. So we got a Micron watch on our hands. Micron's trying to get over 800. It's 796.48. I think they're going to do it. NVIDIA is holding that 220 line. Tesla, 439. So this is what I said at the event. I said that I think that Tesla can become the biggest company in the market, but that's predicated on Optimus. That is predicated on Optimus. Does Tesla deserve to be here? I don't think so, but the markets are forward looking and they're pricing in a ton of earnings potential here. And if you look 5-10 years out, I think humanoid robots have tremendous potential. That's just my own opinion. Everybody knows that that's my theory on this. Okay. How is Rocket Lab not part of the Space Mob, Scuzzy? I mean, come on. I do not know, but I would think that due to their partnership, they will certainly be in the front running for those chips. Jonah, I don't think that these robots are 20 years out. I mean, 20 years is a long time. 20 years is a very long time. Okay. So I am saying that the Space Mob is ASTS and Rocket Lab because they both deal with space. I could be wrong, but that's just what I'm saying. AMD 464. And I think that we got to live with the fact, for everybody asking about SoFi, I think we have to live with the fact that SoFi is being looked at as a bank. SoFi is being looked at as a financial institution, and that's not what is in favor right now. And they need to grow their earnings and revenue. That's all there is to it. That is all there is to it. I don't know if we're going to see SpaceX and Tesla merge. I think that's going to be pretty difficult. Broadcom, I think, is going to do very well. I am a very big fan of Broadcom. I think that they have a ton of forward growth. And we are going to need more chips. There is no question that we need more chips. Broadcom should do very well. I mean, if we bring up the forward earnings, where the hell did they go? This is the problem when I use my tablet. Shit gets moved around. Did it go here? It did. All right. So NVIDIA, AMD, nice if I could type. Broadcom. Who else is? It's really a trio at this point. I mean, that's a ton of growth and at a good number. I actually think Broadcom here is starting to get a lot more interesting. You got a 40% CAGR over the next 2 years, and the forward is under 20 times. I think Broadcom is extremely interesting. when you look at these forward multiples with the growth, and look, let's throw Micron, let's throw SanDisk. I'm actually going to look at SMH. I'm going to put in all of the, as long as they are US companies, because for some reason I don't have this calibrated correctly to do the currency conversions. So I can't put Taiwan Semi in, but we're going to throw Intel in. We're going to throw Texas Instruments in, and I guess we'll throw Qualcomm in. I'm going to address Qualcomm also. I don't think that this rally stops when you look at this, okay? And look, Intel's super expensive. There's no question about that. Intel is super expensive. Outside of Intel, still paying under 10 times for SanDisk and Micron. You're paying under 20 times forward for Broadcom and NVIDIA. You're paying 20 times for Qualcomm, 27 times for Advanced Micro, 29 times for Texas Instruments. But look at the growth. Except for Qualcomm, the growth is incredible for these companies. I think that this is a rally, even if you get a pullback, will be sustainable, especially with what we saw out of the hyperscalers. Now, I do think that Micron is cheap here. I do. It's always traded at a low multiple because of the boom bust cycle, but this may not be a boom bust cycle in the traditional sense that we're used to. Now, let's talk about Qualcomm for a minute, okay? Qualcomm has run a tremendous amount. I missed it. I called Amit. I did not pull the trigger, which is fine. But you know what? It deserves it. You know why it deserves it? You know why it deserves this pump? The market cap is still $252 billion, okay? When you go to the financials and you go to the cash flow, their market cap was around 180 or 200 billion when I was looking at this. Still need to build a slider for this. Their operating cash flow was $14 billion with CapEx of about 1.2. They were doing just under 13 billion of free cash flow, and they were trading even at this level. And we'll use 13 as an easy number. If we go back to the overview for Qualcomm, at 13 billion free cash flow, they're trading at just less right now than 20 times free cash flow. That's still cheap. Granted, they don't have a lot of growth, but we don't know what they're going to really announce. They are very big in mobile. And from a valuation standpoint, even after this run, for the amount of free cash flow they generate, this is still not really that expensive. Paying under 20 times is really a value investor's dream. 20 times free cash flow, valuating a company on that, huge. So I think Qualcomm does deserve this run. We'll see. Sachin, what's up? Did I get stopped out of Sachin? Yes, all this is part of my terminal. The FMC terminal is my terminal. Got all my stuff here. You can go to any company. We'll go back to Qualcomm real quick. I got everything here. So yes, at some point we need to get a call and I'll show you everything. I think Qualcomm is a good company. Now, it's not exciting, but I think more people are starting to realize that this did not make sense. A lot of people are starting to realize that none of this made sense with the amount of cash flow that they had. And sometimes it is a cash flow story. And I do believe the same thing is going to happen to software. I think that'll be the next rotation. And I know that there's a lot of people say, oh, we're going to cut. Hold on. We're going to CNBC. I will hold that thought for a moment. I'm going to back it up. Hold on.
This kind of move, it's always been a governor on the market. But when you look at stocks, I don't want to jump ahead, but I will. Micron. I shaved 10% of this position. I bought it. at 3:30 on March 30th. I bought it again up, about 10% on April 9th. So what am I going to do? I mean, it's now my largest position. That was not my intention. So you've completely recast Micron as no longer a commodity play. And if you go through its trading history, this was comfortably in mid-single digits, not trading where it is now. Now, next year, if you go to next year's earnings and they're sold out, they've got better contracts where they can't be canceled without significant penalties. Next year, you're looking at about 9 times earnings. But nothing's really changed this year. Nothing's really changed since Friday that would have the stock up another 6.5%, or the two I mentioned before. Now, we can all rationalize it, but this stock should not have more than doubled in a month, less than a month and a half, right? And that's where trouble.
So who is going to take the other side of that, though? If you think about the quant community, which is just, as you know, it's just going to continue to push it higher and higher. Yeah. That's why Jane Street and Citadel are having record revenue years, right? Yeah. So who takes the other side of it? The only thing fundamentally in front of us where you can kind of take the other side of the rally is the effect of higher energy prices, which obviously is impacting that broadening out thesis for the market. But for the semiconductor, Dan, I just don't know who has the courage to stand in front of it.
No, I don't think you can. I mean, if you're long like we are, you're either in it or out of it, and you can't really chase it. And if you're going to short it, then you've got some massive upside or downside potential on it. But as a kind of cash flow investor, if you put that hat on, it's very hard to see 2-3 years from now kind of what the terminal value is going to be of these, because they are commodity stocks. It's like buying copper company. It's like buying a steel company. There are moments in time, or gold, when the demand far outstrips the supply. But when those come in equilibrium, they're not reinvesting back in R&D, such as one could argue for an NVIDIA or some of the others that really have higher value semiconductor chips. These are memory chips. They just go in there, they slot for a position, but the demand is so high that today, whatever price, the hyperscalers will pay whatever they need to get it, right? So it's this competition until we see a lot of supply.
So then what happens if there is some sort of newer, more efficient model that gets introduced that doesn't need all of this compute, doesn't need all of this capacity? I mean, is it just a complete reversion to the mean at that point in time? I mean, is that something that we need to be looking out for? Because to Weiss's point, nothing's really changed in the fundamental story other than just this insatiable demand.
So just to let all of you know, I disagree with both of them said, and I'm going to address it with facts, okay? I disagree with what both of them just said. I want to hear what they say to her next question, and then I'm going to give you my assessment on this.
Demand equation changes and pivots in the future. I mean, does it just kind of reverse?
Well, I think the challenge is, and I think, Sarat, I don't know that you disagree here, but it's really about the duration of that demand. And I think right now, if you look at, and you know, akin to what we saw in the commodity super cycle, and we saw several years where that demand continued at a pretty voracious pace. Yeah. So I think if you look at, I guess the answer to your question though, Leslie, is how many companies of the S&P 500 or, you know, how many of them have actually committed what they likely will commit over the next 4 to 5 years in terms of AI implementation? And I would say that's a small number, a small percentage. And so it's the pie is going to continue to grow. And even with additional efficiencies over the next couple of years, say 1 to 2 years, there still is going to be more new entrants in terms of demand. So even if that efficiency potentially offsets some of that demand, that pie is going to continue to grow in aggregate. And there's been investment in this space up till now. All of the investment has really been on that front edge with the hyperscalers. Now, to Joe's point about broadening, the way we see this is that AI will broaden, that this demand is broadening pretty meaningfully to other sectors. And I think we're just at the front edge of that trade. So could you see some interim volatility in these prices as maybe a little too much pulled forward for 2026? Absolutely. But I think in terms of longer term demand over the next couple of years, you don't have nearly the gauge of how many entrants into this market that we believe will be there 2 or 3 years from now.
It's broadening though, but it's actually broadening within the AI universe itself. I mean, how much more can utilities continue to appreciate? Last year, we heard all about
Okay. I'm going to get angry at that. So I don't even want to listen to what he's about to say. Here's the facts. Okay. In the trailing 12 months, Micron Technologies has spent, and I'll just put on the screen. I don't know if any of these people, let me not phrase it like this. I don't know if they've looked at the recent financials. I really don't. Because when you look at the cash flow, am I on quarterly or annual? Hold on. The operating cash flow from Micron I just want to make sure that I'm getting two different things. Okay, so I have 2025. I don't have year to date on this or TTM. Hold on. I forgot. I did not add that in. So last fiscal year, they did $15.86 billion in CapEx. $15.86 billion in the last fiscal year. Micron does not report on a calendar year. Before that, look at this CapEx. 8.4 billion, 7.7 billion, 12 billion, 10 billion, 8 billion. They stepped it up to 15.86. And then in the TTM right now, they're over 30 billion, $20 billion. Their cash from operations, so I'll bring it up on Seeking Alpha real quick. Their cash from operations for Micron has exceeded $30 billion in the TTM. Their CapEx, 20 billion. How they can say that these companies are not investing the way that the chip companies are is insane. It's insane. They absolutely are. If they weren't, we wouldn't see high bandwidth memory from Micron. We just wouldn't. So they're probably just looking at price. They're probably not understanding the story. And I'm not going to say I understand every little thing about every little thing, especially with memory. I don't follow memory as closely as I do the GPUs. I understand it enough though. And moving to 3D high bandwidth is completely different than what they were doing before. If we need more chips, we are going to need more memory. Now, I think what Shannon said was correct. We're going to see a broadening, and we do not know how much is going to get spent. I totally agree with that. But if we look at SanDisk on the same metrics, SanDisk cash from operations expanded. Their CapEx isn't really going up, but Micron's is. And they're spending more in CapEx, I would bet, than NVIDIA and AMD. I don't think NVIDIA spends like a tremendous amount of CapEx. They don't. $6 billion. Now, Micron is building out fabs, and that's probably why their CapEx is exploding. They're not spending this CapEx for a cycle that's running 1 or 2 years. They're just not. They're just not. I think that they're wrong. I think that this has got a lot of legs. I really do. Why is cybersecurity catching a bid? I don't know why cybersecurity is catching a bid today. I think that cybersecurity is going to catch an everlasting bid over the next several years. We are going to have to spend so much more on cybersecurity. Now, some of these companies look expensive. I completely get that. Completely get that. But we are going to spend on not just new hardware that is hardened for AI breaches, but we are going to spend more on software, different platforms. Congratulations, 32% on PanW. That's great. Absolutely great. James, thank you very much. Thank you very much. We also got Lena here. Lena, what's going on? I'll look at Copen at some point. I don't have infinite amount of time, but I will at some point. Now, the semiconductor rally, I think, is going to continue. And I think a lot of people are going to do very well on it. We should not be looking at this as a 1 month or 2 month or 3 month play. I'm looking at this as multi-year. These companies are not building out infrastructure. Taiwan Semi is not building out infrastructure and increasing their CapEx by an absurd amount for a 1-year benefit. Currently, Taiwan Semi's CapEx, and you got to follow the money. And that's what I do. I follow the money. Maybe I don't invest in everything that's running, but I do understand following the money. On a year-over-year basis, Taiwan Semi's CapEx went from 29 billion to 40 billion. And they're expected to increase CapEx again. You do not increase CapEx if you're Taiwan Semi, if there is not a dramatic increase in demand for chips. Taiwan Semi probably has the best insight to demand because they are the number one fab, the number one producer of the actual physical chips. Forget hyperscalers. We could go down and you guys could hear me talk about hyperscaler CapEx, et cetera, et cetera. Put that aside. If the only number we look at is what Taiwan Semi is doing as the largest fab, they're not increasing CapEx if there is not incremental increase in demand. Full stop. Taiwan Semi is currently buying back a ton of shares. In the TTM, they bought back over $15 billion of shares. They could just increase buybacks, but they're seeing that it is more beneficial for them to allocate more to CapEx because of the ROI in the future than stepping up their buybacks. So I am very adamant that the AI revolution is going to continue to go on. And look, I don't have to be in every single play, but I do think over time, a lot of these plays are going to continue to do well. Maybe an ETF is the best way, but I will say we have not seen the beginning of enterprise on AI. We have not seen the beginning of how companies like an Exxon or a Chevron or a Coca-Cola or a Walmart are able to increase their margins or really benefit from AI. This is, in the grand scale, this is truly the beginning of the next era of computing. Cloud infrastructure is still scaling to this day. Cloud infrastructure is not new at all. It is still scaling. I don't remember the exact number, but yes, they did announce that a large portion of free cash flow would go to buybacks. When I look at cloud infrastructure, that is still scaling a decade later. We have to at least say that it is entirely possible. This is not a 1 or 2 year cycle. We'll see. We'll see. Let's go back. Let's see what everything is doing right now. Whoops. Wrong button, everybody. Wrong button. All right. For the indices, 74.25. Okay. I'm going to take some time this week. I'm going to make the Steve is a liar page. And right now, I need the S&P to go up. Let's see. What are we at? We are at 74.25.06. I need the S&P to go up another 574.94 points. I need 7.74%. And then I will not be a liar this year. I was a liar last year. The market did not hit 7,000. Took until January. I do believe that we're going to hit 8,000 this year. Micron 789, Nebius 192, Rocket Lab 118, Tesla's running 440, AMD 463, NVIDIA is holding that 220 line. Reddit 162.01, it is running. Dipped a lot last week, it is back running. SanDisk 1568, flipped. SanDisk was red. SanDisk was red, everybody. Keep that in mind. We got the Qs up a little bit, which is nice. CoreWeave up $2. Cisco 136. Service, meow, as Matt would say, 92.37. Cloudflare, looks like the bleeding is stopped. Fortinet, I still think is very attractive here. SoFi, even keel. Pipelines, kind of even keel. Verizon, even keel. Amazon 272. Zeta, we'll get into Zeta in a little bit. Palantir 135. So let's address Palantir for all of you. Thank you, Star, so much. Actually, I'm going to put a poll up. Let's go on this theory for a second. Hold on. Let me bring it up, and then we're going to do a quick poll. Should I and thank you for all of you that have subscribed to Basis Points. This is the in-person show that Amit and I do every week. We started not too long ago. We have 10 episodes out. We're almost at 13,000 subscribers. Should I do a hoodie and a hat more often? Yes or no? That's going to be the poll. Should I do a hoodie and a hat more often? We'll see. We will see. Jake, what's going on? Chels, you got that ASTS and Rocket Lab money. You're killing it. And just so everybody knows, Chels may have got me something where I will be a Rocket Lab shareholder for life. Just saying, we're not going to say exactly what it is. You guys will see it pretty soon. It is currently in transit. So, Chels, thank you so much. You absolutely did not have to, and I greatly appreciate it. All right. Live. Let me get in here so I can put up the poll. Okay. Start a poll. Next basis points. Be nice if my caps weren't on, right? Next basis episode. Business, formal, or hoodie and hat. See what all you think. Let's see what all you guys think. June, everybody's going to see when it gets hung on the wall. That's all I'm going to say. It is getting hung up. I was so worried. So whatever Chels got me, I was so worried that because of the size that I would not be able to get on the plane, and I did not want to go into check-in because I didn't trust those morons. So I shipped it back. So I do not physically have it at the moment. I will physically have it in like a day or two. And we were not letting that get damaged at all. Wow, you guys are split. You guys are split. Wow. We're going to leave the poll up for a little bit. We're going to leave it up. And we're going to get back to my original assessment about this. I trust FedEx more than I trust the airline I was flying on. How about that? I absolutely trust FedEx more than the people at the airport. Just saying. I've shipped a lot of stuff with FedEx. Not saying that they're absolutely perfect, but if I got to pick the two, I'm spending the money to send what she got me through FedEx 100%. No question about it. Don't worry. You'll see it soon enough. You'll see it soon enough. Austin, shouldn't you be working, Austin? We missed you guys in Chicago, Austin. Thank you for being here. All right. Here is my assessment of what we're going to say. I do believe the markets are going to expand so much. And yes, am I a permeable? Absolutely. But I don't think that this is going to stay in chips. I think this is going to bleed over into the rest of the sectors. I think that we are going to see that AI becomes a game changer for companies, and they become so much more efficient from utilizing AI that it will show up in their forward earnings. Now, financials are a sector that I think will benefit dramatically. There are so many back office processes that I think will be automated, and I think that they will be able to increase the revenue per employee. I'm looking at companies that have huge SG&A budgets, and I'm thinking, how do they monetize AI in the way that benefits earnings and revenue? I do think that we see the markets really catch a bid, especially if we get to the point where we start getting rate cuts. We get rate cuts. Wow, 60-40. We're going to stop the poll in a minute, so get your votes in. And if you're not following basis points, please follow it. It is, we're getting so much really great feedback on it that I am so excited. Chels was with me, and I'm going to say this. I only had one pizza place. It was good. I'm not going to shit on Chicago pizza. Chicago pizza was good. It does not hold a candle to New York, but the chicken parm I had was excellent. That's all I'm going to say. Chicken parm that I had was awesome. And we went to Gibson's for dinner on Friday, and it was an incredible meal. It was incredible. I mean, part of what makes it is the people you're with, and it was just such an amazing group of people that it's one of those dinners that I'm going to cherish for the rest of my life. There's no question about that. But the food was great. The food was absolutely great. Yeah, I agree. Friday's dinner was absolutely incredible, except that Amit may have, caused a little bit of a party foul. So, unfortunately, he was a little clumsy. Oh, I wasn't going to say it, but yes, Amit spilt wine on Shells, unfortunately. It was one of those things you kind of had to be there. Kind of had to be there. All right, hoodie and hat. Looks like I got some soul searching to do. Looks like I got some soul searching to do on how I'm going to dress. Interesting. They are talking about financials posed to break out. I actually agree with this. And I don't know if enough people really follow the financials, but they could.
Probably why you're seeing the fact sets of the world and some of the publicly traded data providers really get impacted by this.
But if you turn that around and you look at the alternative asset managers, for instance, the bar is continuing to be set pretty low for these managers, because there is, to Steve's point, this concern about potential contagion or spreading of the private credit challenges. And so really looking at the underlying fundamentals of those businesses, there's also starting to be some interest on the institutional side in some of these BDCs. And so you're going to get to a point where, whether you're investing just in the financial sector on the public side, or whether you're an institutional investor looking to potentially create some value out of, perhaps assets that have been priced lower appropriately, but now look more attractive. Those are some things that I think we need to be watching. And so if you look at the second half of the year, we wouldn't be all that surprised to see a bit more interest in these alternative asset managers, particularly as distribution rates from their traditional private equity portfolios are ticking up.
Yeah, no, you definitely see outflows largely from retail, inflows, which there are inflows. People forget to mention that from the institutional side of things. Now to Mackenzie Sagalos with a CNBC News update. Hey, Mac.
Hey, Leslie. Here's what we're watching this hour. The Food and Drug Administration is seeking public input on repurposing approved drugs for potential new use.
Okay, don't really care about that. But Shannon could be right. You look at JP Morgan Chase. Let's bring this up. Let's pick on JPM. Not that I'm picking on them, but let's bring it up. If we think that AI is going to do what we think it can do, just on the income statement, okay? Their total salaries and other employee benefits, $43 billion. Total selling, general, and admin expenses, $31.7 billion. Are we going to really say that they're not going to figure out a way to save money? Are we really going to say that? I think that the financials will be one of the next sectors to really benefit from AI. And then I really do think that we're going to see warehouses and the conglomerates really benefit. And I think that that's going to be the key to unlocking not S&P 8,000, because I think that that's going to happen regardless, but getting to S&P 10,000 over the next several years. I think that that's a real reality by 2030, maybe even sooner, maybe 2029. And I don't think that that's a crazy thing to say. Think about this. S&P 10,000 from where we are, 35% away. 35% away. You could have that potentially next year or the year after in 2028 if we get a big rally. We've had years where the S&P really runs 25%. Diddy S&P 10K is end of 2027, in my opinion. Maybe. I don't know if it's going to happen that quick, but it's possible. I think 2028 is more realistic, but I'm with you. Even if we get a downturn, I do think that we're going to see robotics and AI be the narrative that allows... Oh, shit. Let's see if this is true. Hold on. Let me go to the Wall Street Journal real quick. They are not saying that. And the reason I said shit is because supposedly Axios is saying Trump weighing action against Iran. So let's go to Axios and see if we can find that. Well, it's true, according to them. It's why we can't have nice things. Ceasefire on life support. Trump weighing military action. Let's hope that this does not go any further. I am not happy about that, okay? Yeah, I get it. He's always weighing action. How correct have they been? I don't know. But we don't have a deal. We don't have a deal. So he very well could be. We'll see. I'm not telling anybody to sell anything. What I'm saying is that the large companies will be beneficiaries of AI. We are not spending this much on CapEx and putting this much into AI for companies not to benefit. The companies haven't really started benefiting yet. This is going to be a 5 or 10 year cycle at least. We're in the very early stages of it. So let's get back to pre-digger. Thank you very much. Really appreciate it. I don't even know what SHIP is. I don't know how much I can give you on it. I don't even know what this is. Hold on. Whoo, you know what? I should reach out to Dan Ives and be like, hey, Dan, I think it's 6 p.m. at the 4 a.m. party. See what he says. Maybe I'll tweet him that. Synergy Maritime Holdings. I mean, you have my attention. And the reason you have my attention is because they pay a dividend of almost 5%, and it's up 174% this year. The hell is this? And what was this? Why was it? Okay, that scares the shit out of me. Dry bulk shipping names. Free cash flow positive. They must not have a lot of shares outstanding, do they? 48 million cash. Long term. All right, that's not bad. Very low float. Okay. Revenue not growing. Hold on, let me go back. Revenue not really growing. Good margin. Profitable. You have my attention. I'll look more into it. You have my attention. I don't know anything about this company. Numbers don't look bad. So I will certainly look at it. Let me write it down so I don't forget the symbol. SHIP. Okay. I'll get back to you. The numbers look interesting, though, to be quite honest with you. I like Netflix. I absolutely like Netflix. Netflix is a great company. I think that probably not many people are like me that cancel their subscription, but I like Netflix. Mercado Libre. I'm not an emerging markets person by any means. I don't know anything about them. I don't follow them. I know Tanner was big on them. It's not something I can help you with. Listen, I like Now. I started a position in Now again. I'm a Now shareholder. I think Now is very interesting. I think Salesforce is very interesting. I think Workday is very interesting. I think those companies are going to do well over time. So that's all I can tell you on ServiceNow. I own it. Just because I own it does not mean it's going to work. Obviously, everybody saw what happened with Reddit. Reddit got crushed. Okay. So we'll see. Too late. Yes, you did hear that. I am a Now shareholder once again. Do I own any financials? Yes, I own Bank of America. I own Citigroup. I own Bank of Nova Scotia, and I own SoFi. Yes, I do. I don't buy leaps. I buy the equity. So everybody should do what's best for them. Clorox is not in the dividend portfolio. If you really want me to go down the rabbit hole on Melee, you're going to need to give me a couple of days to do the research. I don't know anything about them. I'm not going to come on here and start talking about stuff I don't really understand. I can't do that. It wouldn't be right for all of you. It just would not be right for me to start giving you an opinion on it. Look, I think Micron can keep going higher. I think Micron is in an interesting position where, from a forward earnings perspective, it is cheap. Okay. We have a legend in the chat, Nostalgianomics. Alex, I am going to call you today or tomorrow, and let's get the project off the ground. The other one, not this one. Do you buy single Pokemon or just the Pokemon 500 index? Well, I'm glad you asked, and I have not had time to work on it. But according to my calculations, the Pokemon market has exceeded the S&P 500, according to my calculations. So, I don't know, Alex. I don't know. But we'll talk about it. We're going to talk about it. So we'll see. This may be a little project that I'm working on. Just gave everybody a little sneak peek. Erwin, what's going on? I got a lot better looking up in here. What's going on, Erwin? So there may be a little project that's in the pipeline. We may get more involved on that. My take on Mo is I don't know that it was really going to go past 75. I think Mo is still a great company. I own Mo. I'm not getting out of it. I think it's a dividend compounder still, and I think that's the way that we're going to look at it. I did hear some interesting takes, and this is one of the things that I do want to say about the meetup. One of the best things about the meetup is hearing everybody else's opinion. Forget hanging out with Amit or me. That should not be why you go to the meetups. Why you should go to the meetups is the community. So many people that are in the chat got to meet and interact the other people in the chat. And there was a lot of great conversations and a lot of great ideas being discussed. And there's a lot you take away from these. There's a lot I took away from it. And getting other people's perspectives about things is very important. Because the one thing that's very dangerous is being in an echo chamber. And I think that that's the most value provided from this is really being able to interact with a lot of other people that have very similar interests. Because I know for me, there are not many people that I know from here. When I say here, I don't mean YouTube and this space. I mean, people that I grew up with that are really into stocks. And I think that's why we all come together so much, because we are all interested in stocks, and it gives us a area to discuss these things with other like-minded people. And I think that's the true value of these meetups. And I think it's really, really beneficial. I will probably not be going to the Europe meetups. I apologize. We will see. There was a lot of great conversations there, and I agree with what Chels said. And Chels, you got to get your friend to start coming to the meetups too. I feel like she had fun. Parzival, that's great to hear. That's great to hear. Yeah, I think everybody who comes to these meetups really has a great time. I have not heard anything bad about them. And it's an incredible place to really discuss investing as a whole. I am not going to Singapore. I apologize. I can't take that much time away. I can't do it. It's such a big commitment on time. If SoFi look, here's SoFi in a nutshell. I agree with that. You know what, Hollis? I'm extremely busy, man. I am so busy. So busy. Look at this. Sam is here. Sam, congratulations. Some of your picks are really running. Congratulations, man. All the best. All the best. With the Rocket Lab run, we could do a meetup at Maddie's new mansion. Don't worry, I'll send Maddie some ideas for places he should buy. All right, so I wanted to, I'm trying to keep up with you, Sam. I'm trying to keep up with you. But I do think that all right, I'll get to that in a sec. Hold on. Justin, thank you so much. I really appreciate it. Yes, I'm actually bringing back Alternative Asset Weekly. So Alex and myself, Nostalgianomics, we will be doing a joint show, I believe, once a week, and we're going to start it this week. There will be a dedicated show to that. Now, what I wanted to say about two things. One, let's address what Austin said. I think that SoFi is a great company, but they have an image problem. And they are not proving that they deserve to be considered a technology company. I could be wrong. It's my opinion. My opinion is their numbers are great. What matters is their members' growth. What matters is that they continue to increase members. Their members continue to use more products, and that tells us that they have put out something that they truly love. But they are not doing anything to show the market they are not a financial institution. All of their revenue and all of their profit is dominated by financial services, not by technology. So if they're going to be classified as a bank or a financial institution, there's two main metrics: multiple on EPS, multiple on tangible book value. They need to break that. They need the tech platform to really start monetizing. And until that happens, I think they're going to be in the same boat. Now, they are growing quicker than anybody else. And I do think with the large amount of inheritance that's going to happen over the next 2 years, SoFi is in a position, I'm sorry, I said 2 years, next 10 to 20 years, I think that SoFi is in a great position to continue their build out. But their multiple is going to be predicated on what they deliver on EPS. Unfortunately, we may be stuck a little bit. I don't know. I think rate cuts will help because it'll increase refinancing and stuff. But the reality is they're going to be looked at as a financial institution. And the multiple on financial institutions just don't go crazy. We'll see. I'm still a shareholder. I'm not leaving. But I think SoFi is going to be a very sticky situation for a little bit. As far as AI, I do think that this is going to be a rally that really works for a lot of different segments. And I think this is going to be a rally where we continue to see not just individual names do well, but a lot of indices. Nebius, 190. Look at this. All right, we're bringing it back up. Rocket Money, 117. Nebius, 190. Micron wants to break over 800. It really wants to. It's up $50 today. To think Tanner's in at this at like 360 or something like that, congratulations to Tanner. Reddit up a little. NVIDIA is trying to hold 220. AMD 465. Sam, which energy names? I mean, Enbridge up 105. You don't see that every day. You do not see that every day. Man, Sandus went from red back to green. Gotta love that. I do think that we're going to see more on cybersecurity. And Fortinet still looks very interesting to me at these levels. ServiceNow turning red, Broadcom turning red, Amazon holding 270, Apple holding 290, ARM, I don't know why ARM is still above 200. That doesn't make sense to me. Meta's down, Oracle's down, Microsoft is down. Palantir. I do believe Palantir is going to be stuck for a while, everybody. I hate to say it. 100 to 150 is going to be the range. It's going to be a wide range. Yeah, why is Sam not a moderator? Hold on. I don't know why. Good question, June. Hold on. Yeah, Sam should be a moderator. Why is he not a moderator? All right. I fixed that. Sam, you're now a moderator. I don't know why I wasn't. Energy plays for data centers. I mean, pipelines. I talk about it all the time, pipelines. Nuclear stocks going nuclear. Why? What is SMR doing? Up 4%. ACLO 6%. Interesting. Sam, do you want to come on for a few minutes? If you do, I'll shoot you the link. I'll shoot it to you on X. All right. Sent it over. Sam's going to come on for a few minutes. Yep. I got two specific questions I want to ask Sam. Kinder Morgan is incredible. 78,000 miles of pipeline. I think they're incredible. BCX, why does that sound familiar? Is that the BlackRock? Do I own this? I own this. Look at this. Rusty, I own that. Lena's got to rub it in. She always rubs it in. Yes, Tesla's breaking out. I see it. I see it. $1.6 trillion market cap, a PE at 208. Absolutely incredible. Incredible. I don't even know what to say about that. Look, I'm not shying away from this. Tesla has the ability to become the largest company in the market. It really does. The largest company in the market. I just don't know if it's going to do it or not. I have no idea. but it certainly has the ability to. Caterpillar. Austin, do you remember when they had that accounting fiasco and Caterpillar went down to like 90? Oh my God. What an incredible rebound this was. Lena, this is specifically for you. Tesla has the ability to become the largest company in the market in the future. That is predicated on Optimus. I don't think there's any robotics company that can hold a candle to Tesla's manufacturing. That is my own personal opinion. A few people have asked me to look at that. I will probably start looking at it. Oh, let me be very specific. My comment is a very long-term comment. 10 years on the horizon. It's not going to happen overnight. A lot of people will be very happy if I'm correct. I can tell you that much. A lot of people are going to be really happy. And look, technology never... Oh, hold on. We're cutting over. We're cutting over. I got so many things open. I'm about to go crazy.
So you had the Netscape Navigator come out at the end of 1994, and the NASDAQ over the next 3 years was up 109%. You get to year 4, though, and NASDAQ was up 40%. And then in year 5, in 1999, it was up 86. So you look at when ChatGPT came out at the end of 2022, and you're 3 years into this, NASDAQ is up 122%. So first 3 years of the internet was up 109. And I think this is going to be a great year as well. And the point is that you had 2 more great years back during that period of the internet build out. And I think you at least have 1 more great year this year. So you can be in a bubble, but still have it inflate a lot more before you get to the end of that.
What caused it? And I will add as well, I mean, I have only vague memories of it, but they were enough to know. I mean, back in the era of magazines, right? You'd get these magazines and you'd have these cover stories of all these high-flying companies, and everybody was day trading. It was a total phenomenon. I'm not sure we're there yet with the public right now.
No, absolutely not. But more important than that is what's going on fundamentally. Back then, it was just internet traffic doubling every quarter or so, and that kind of kept it going. This time, you had a very major event happen at the beginning of this year, and that's basically OpenClaw got finalized on January 30th. And so that kind of ushered in this whole agentic AI thing, where before, Kelly, right, you would ask your ChatGPT or Gemini a question, and it would give you an answer. So that's just chat-based AI. Mm-hmm. With agentic, you may say, hey, go to the SEC website, pull this down, go to CNBC, pull this down, go to, whatever website, pull down some stock information, and then put it all in a spreadsheet, and I want you to conform it this way. That takes 10 to 100 times more compute power. You see it in the token generation data, where the 2 months prior to OpenClaw being finalized, token growth was about 20% over the prior 2 months. In the 2 months after OpenClaw was finalized, the growth was over 120%. And so you should see at least strong growth, in my opinion, through the beginning of next year. And then you're going to lap those harder comparisons, and then we'll see what happens. But that's one major difference, at least between now and I think year 4 and 5 of the internet, is you have this major step change in token generation that you need right now.
Sam, are we in a bubble?
Yes, sir.
And does the rally continue?
So I don't think we're in a bubble right now. All right. I think we're getting there. We're definitely getting there, but I don't think right now. And I think the problem is that people are calling it a bubble too soon and therefore not participating in the market. And that is just, I mean, it's unbelievable. The Qs are basically going vertical. Like, this is not a speculative stock. You know, this is an index of 100 tech companies weighted, and it just literally just goes up like every day. And I do think that there's a lot of people not participating in it, which is causing it to just keep going up, right? And I'm not talking about retail traders. I'm talking about like fund managers. Billions, hundreds of billions of dollars just constantly being injected in the markets. Plus, I think there's a lot of rotation coming out of other stocks that's pushing the heavy-weighted semiconductors up, which is continuing to propel up the Qs. I mean, NVIDIA is at a new all-time high today, right? Like, that's a lot of market cap to move. Tesla's at an all-time, well, not an all-time high, but it's heading, I think this is heading toward an all-time high, not because of the EV story, because of the energy story. I think that is really the story of Tesla right now. And I've pointed out for like the last few quarters, like, dude, guys, everyone's looking at EVs for Tesla. Like, look at their energy segment. That they, not last quarter, but the quarter before that, it grew like 75%. Has been accelerating, of course, with the exception of last quarter. But I think that is the reason why Tesla is rallying, along with all just other energy stocks I've been talking about, but specifically in battery and energy storage, right? Anything that has to do with battery and energy storage is basically ripping today, and anything with nuclear is going nuclear, like I said.
So chips.
Yeah.
NVIDIA is breaking out all-time highs. We see AMD going parabolic, Broadcom, Qualcomm. Where do you think we are in this? Micron and SanDisk are both doing their thing. A lot of people are saying that we're in a situation that's unsustainable. I've taken the other side on that. What do you think from this? Because you follow chips maybe closer than anybody that I know.
I mean, you know, Jose is definitely all in chips. I think he is like well more in tune with semiconductors than he's been a while. I mean, you probably already know about the chip stock investors, Nick and Casey. You know those two people, like they've been okay. Well, they've been all in on it for a long time, and they provide really good research. Like, let's be honest, guys, I can't sit here and just do all of my research all the time. I need to outsource some of my research along with supplement it with my own research to gain the conviction on it, right? Conviction is the most important thing. But a lot of these charts have been setting up for quite a while, right? So fundamentals will get you in the stock fundamentally, and technicals will give you the entries that you want. And I think a lot of people who are constantly calling this a bubble, saying that this is the top, saying that there's no way you can go higher from here, a lot of that is because they're just not participating. And I'm not here to like say like, hey guys, look, we're all making money saying you guys aren't. It's more like, look, right? You're even Dan Niles said it. I've been following Dan Niles for a while. Even ask him more than a few questions sometimes. Like, you know, he's been sometimes your resident bear there, but even he is saying the thing that I've been agreeing on for a while is that, look, the S&P 500 and the market follows earnings growth. We are starting to stray to the portion where the market is kind of growing a bit past than the operating income that has been displayed in forecasts for a while. Like we're starting to stray away from that. But I do think that, you know, given the positioning of a lot of big funds in the market is that we are probably somewhere in the middle of the 1990s, maybe 97. And if anyone follows the history, like the NASDAQ doubled during that time in a very short period of time. There were barely any pullbacks. Pullbacks were sharp, but they were very quick. And unfortunately, you know, it leaves a lot of people in the dust. And probably around the time when everyone capitulates is when the top is there. Like you saw the interviews with Stan Druckenmiller, right? Timing is everything. This dude shorted internet stocks and got his face ripped off and then capitulated. And then not too long after that, the market actually topped, right? He always says timing. Timing is literally everything when it comes to this game, you know, and 3 weeks ago, not 3 weeks ago, end of March, like people thought the earth was falling, the planet was falling off a cliff, right? That we were going to war and all this stuff. And to be honest, if you look at the SOX ETF, like it barely had any drawdown during that time period. All the drawdown were the other sectors and everything was going to energy. But now today, you're getting a lot of the energy stocks continuing to sell off. Oil is kind of gapping up here. But when I say energy stocks, I'm talking about like your Chevrons, your Exxon Mobils and stuff, not the ETNs and not all these companies you're invested in as well, Energy Transfer and all that, but mostly the ones that are specifically tied to pumping oil in the Middle East and making all the money there. And also, if you think about it and you look at even a lot of the charts out there, there are some stocks that that actually went up through that drawdown, right? They were still up year to date, even though the S&P 500 was down like 7-8%. The NASDAQ was down like 10%. It was in correction territory. Those were the stocks that people should have been buying, right? Unfortunately, wasn't the software stocks, because even IGV was down today. Monday.com reported really good earnings this morning. They're up like 30%. Now, what are they? They're up 2%. They gave up a 30% gain. Like, that is the market telling you this is not what you should be in, right? And there will be a day where software stocks come back. The thing is that it's not today, right? And the participation or lack of participation in what's working is what's pushing it higher. And I'm not going to sit here and be bearish software. Like, I have software stocks in portfolio, right? But the weighting of semiconductors has massively taken over my portfolio. And now it's energy stocks because of the appreciation of these stocks in terms of valuation, right? Like, yeah, some of that stuff is like way overvalued, right? Like, I didn't think ARM was going to be above $210 so quickly, but here we are today, and those earnings were good, but like, I didn't think it needed to be $260. Like, that was pretty wild, but give us some of those gains. But like, look at the other stuff. Like, they're just running, and some of these valuations are getting pretty egregious, but NVIDIA is not expensive. And that's a $5+ trillion company. That is not an expensive company at all, right? So it will continue. I think it's going to continue. I don't think it's going to be a straight line, but I do think that dips will get very aggressively bought very quickly. And the bears usually get the loudest, like at any 1-2% pullback, right? We had a 1.5% pullback in the Qs last Thursday. That thing got bought up plus more on Friday. And this push and pull thing happening with Iran and the US, like, the market ends up higher than where it did before that started, and nothing got resolved, right? We've had oil at $110 and NASDAQ at an all-time high. Oil's at $100 and NASDAQ's at an all-time high. If oil goes back to 110, who knows what's going to happen? I can't really say what's going to happen, but there's so many catalysts happening this week that's going to continue propelling it up, right? Look at the dip on Circle this morning. Circle was at $108 this morning. And this thing, is it above 130? It's $128. That's a 30% intraday move on Circle, right? The market is bullish. It is 100% bullish right now. Stop trying to short the market, guys. I know you guys are. I'm just saying, like, to all the accounts out there that are constantly saying short the market, this is the top, I have the most amount of cash I've ever had in a long time. Like, guys, don't fall into this trap. A lot of you guys are long-term investors, and you're thinking about selling things now. Like, if you're a long-term investor, why are you selling, right? I know there's like a lot of trades that are on the table and stuff. Like, that makes sense, to trim whatever, but don't sell. Don't cut your flowers and water the weeds, right? That is the one thing that Peter Lynch has always said. Maybe that's not the exact quote, but that is what he said, right? Buy the leaders, don't buy the laggers. At least don't buy it heavy, and don't buy like short-term call options thinking this is the bottom. You need confirmation with this stuff. And to be honest, like, it's wild. Like, I'm sorry to talk, but this is a wild freaking market, right? But a lot of the people that are calling tops, I guarantee you they're in the wrong things, or they're short the market.
Well, there's a problem with that. There's a very big problem with that. And it's called, this is the S&P over the past 10 years. People have been calling tops. People have been calling tops since 2000, since 1995. People are still mad the NASDAQ is over 10,000. Every time you get a downturn, it does not matter if it's a month or a year, eventually the market goes back up. We're just in a situation where people think that this is a trade that's exhausted without actually going through the cash flow statements or the balance sheets. This is not that. And the CPI print tomorrow is going to be very scary. If we get CPI over 3.7%, we could see a dip, but it could be a short-term dip. We need oil under 80. And long-term, or let's say short-term, over the next several months, I think that we're going to be in a much better place in 3 months from now than we are today. and volatility will get stripped out, these companies are not spending on CapEx over buying back shares for no reason. And these chip companies, I think, are still going to run. They're making a tremendous amount of money. And we're going to be at an inflection point where the largest companies in the world and the mid-sized companies of the world are going to expand margins because of AI and robotics. And I think we haven't even seen that yet. And to try to think that we're at a top, here's my problem. Okay, let's say we're at a temporary top. Are you really good enough to buy it 5% down or 10% down and know when to get back in if that's what happens? Most people can't. So enjoy it. And when it goes down, just buy more. Too many people try to time the markets and just get caught. And when it comes to NVIDIA, this is still a very inexpensive company compared to the market going forward. And when I look at these companies, I think that we got quite some time left. Now, I will say this about energy. I think we get a rotation out of energy later this year as oil starts to come down. Because if we get oil at 80, I can't see Exxon and Chevron, which I own both of them, staying where they are. I think they come down a little bit. I think we get a rotation back into tech. I also think that, and I was talking to somebody that came to the meetup, Sam, I wish you were able to come.
Yeah, I wish too.
Somebody that was a nuclear engineer, and they were talking to me about SMRs. And what they had to say was very interesting. So,
I mean, I'm in a couple of energy stocks right now. Again, it's not like I listed a lot on Twitter, and I don't want to do disservice for people that are subscribed, and I don't want to say what it is, but like these energy companies that I'm in, one of them sells power to hyperscalers at wholesale prices, right? They are not a utility company. So Vistra is a utility company by nature. They sell power to consumers. They also sell power to hyperscalers, right? But I wanted specific focus on the data center, so I wanted more exposure to that. So that's the company I get into. In addition to that, I'm also in another company that builds power generators on site at these data centers, right? So this is all still tied to AI. Like this is why I don't know if I'm going to buy 50, $100 billion plus companies, because like you can't get like a double in those companies. You got to get in the smaller cap, mid cap space. And that's why I targeted those. I'm not saying Vistra can't do good. I'm just saying like, that's the reason why I stayed away from it. But speaking of oil, so if I look at the XLE chart over here, okay, so I'm going to get a little bit technical over here. So if I look at the XLE chart over here, this is the daily chart. This looks very bearish, right? You're having lower highs, right? And then now you're below the 50 EMA. It looks like it's going to close above the 50 EMA, which is good, but it needs to get back above the 20 EMA. But if you look at these oil contracts here, this is crude oil, right? This is called backwardation, right? It's basically saying that current spot prices of oil are more expensive than the later contracts of oil. So the market is basically bidding that oil is going to be lower later on. This is what you need to see with oil that's going to put downward pressure, because as these contracts come to expiration and they become mature, they're going to roll into the next contract and they're going to continue selling oil. Like, look at this. Oil 1 year from now is expected to be 20% lower, right? So what does that tell you? That tells you that market makers are not willing to bid up oil and think that it's higher price. They're speculating lower prices. So why would you be long oil from here if the market doesn't think it's going to be higher? Every single contract is lower before the other one. This is backwardation. This is very healthy for oil. If you look at the futures, if you look at the, what was it? Hold on a second. I wanted to pull up the energy stocks. So I sent you a link for this, but if you look at this basket of energy stocks here, I actually need to update this. The NASDAQ is only up, it's only up like 20 basis points or something like that. But look at some of these nuclear stocks. Like they're all flashing bullish right now. This is above all the moving averages. CCJ is about to close above the 20 EMA. All right. CEG, a little bit different. Like this is actually pretty obvious by $100 billion company. So there might be money that's rotating out of this and more into like more of the speculative stuff, because the speculative stuff has been working. NNE is pretty much setting up for a bullish chart over here. So's Oklo, so's SMR. So basically your nuclear stocks, I forget the exact term because you literally just said it. I forget the term, but I'm not saying like, hey guys, yeah, I'm not saying like go all in, like these speculative stocks. These are pre-revenue. So I'm staying away from pre-revenue companies, even though they're setting up for some pretty nice upside. But look at the URA ETF. It's above all the moving averages here. Like, this is flashing bullish. Now let's flip around. Let's look at software, right? This is still setting up for a bullish move here, but it's dramatically underperforming stocks, right? So fund managers are going to be like, look, I'd rather buy stocks here instead of IGV, mostly because of the risk parameters. But if you look at the IGV stocks ratio, the one that I've been always pointing out, like, this is continuing to make lower lows. Like, it literally cannot get above it. This is screaming that semiconductors are outperforming software. So, you know, when money managers look at this stuff, like, they're not like, oh, I'm going to buy like the dip heavy on IGV, right? Because they're not going to go ahead and they're not going to pick like a $5-10 billion small cap, mid cap software company. They're going to buy the ETFs usually for their clients, right? And that is ultimately pushing this higher. So I shared with you, this ETF, Power, or POW, right? So this is from Vista Shares, and I don't own this, but I own some holdings that I used to own some holdings that are in here. This is all energy, right? But not like your XLE energy. Like, this is energy that provides power to data centers and basically part of the AI infrastructure. Everyone's heard of GE Vernova. Let's look at GE Vernova. This thing is up 65% year to date. Let's look at some other stocks that are in here. You mentioned ETN. Oh, I can't click on it. ETN, 30% year to date, right? Let's look at Powell Industries, 200% year to date. This is what people are going into, right? It should really be less about, I don't want to buy what's doing well because I want to be able to buy what will be the next thing. And that's why a lot of people are buying software. But there is plenty of time to get into software when that rotation does happen. But this chart right here, this chart is telling you it's not today, right? You're never going to call the bottom. So why not wait until this thing gets above the 50 EMA? Because it certainly is not happening, right? There's plenty of time to get in this. Again, and now to reiterate though, long-term investors, who cares? I don't know, like 20, 30 years, like who the hell cares where things are at today? Who cares about the Iran war? This is going to get resolved. This is all going to get resolved. And trust me, if this war does not get resolved and it escalates into nuclear war, like, you ain't got to worry about your portfolio, guys. You got to worry about not getting shellacked on the street or something like that. I think that there's a lot of FOMO in the market. There's a lot of people that are literally avoiding what's working in the market. And it's simply because they hear it from their friend, they hear it from their favorite FinTwit follower. And unfortunately, that is landing people in a nasty bucket where they are massively underperforming the market. And it makes them worried, especially for some people, if they're long-term investors, even though they shouldn't be worried, right? It's this constant cycle of FOMO. And this is the reason why I do agree, like, this can't go on forever, but it's happening right now, right? So somebody mentioned MRAM. I don't understand why that thing is ripping. I think it's because some people think this is like DRAM, so they're accidentally buying it. But anything that has to do with Cerebras is rallying today. Like Wi-Fi, ticker symbol WYFI, is up 33% today, right? There's also Peng, PENG. That's up another 2% today. That chart's gone vertical, right? So it's like the market is just crazy right now. I'm not in any of those stocks, by the way, and I'm definitely not planning. Are you planning on buying Cerebras? Yeah, that's a stupid question. I know you're not. You're not going to buy it. I know you're not going to buy it.
I don't know. Hollis was trying to talk me into it. I actually started reading through it. It seems pretty interesting.
Yeah.
I'm probably just going to stick with NVIDIA. I mean, when I look at the forward, I'm seeing a lot of things I'm interested in because NVIDIA trades at 17 times forward and they're going to CAGR their EPS at 25% over the next 2 years. AMD, everybody wants to say is expensive, 27 times, but they're CAGRing at 53%.
That's
Broadcom, I think, is interesting under 20 times forward. And the reason why I don't think Micron and SanDisk stop, they're still under 10 times. And I don't know that this is the same boom bust cycle as DRAM traditionally is. People seem to forget that HBM is much different. These companies are not spending on CapEx for a 1 or 2 year cycle. So I think that this continues to expand, but I'm probably just going to play it safe. I think for me, safe is NVIDIA Broadcom, and I'll probably just buy the ETF also as kind of a side way to get exposure to all the other companies, such as SMH.
Yeah. So SMH is good. A lot of people buying DRAM, which is elevating the the price of memory stocks, and to reduce risk, you buy the ETF versus individual stocks. Me personally, I'd rather buy individual stocks, but I'm not in memory. I think I've completely missed on that cycle.
I think we all did, except for Tanner.
Yeah. But I it's funny because I was one of the few people like pounding the table on Micron summer last year, and this dupe sold out of it probably around like $220, and then even like flipped bearish into the earnings, and I lost some money on a hedge, but I easily got out of that one because that was a dumb move. But dude, my leaps that I had with Micron are like $500-$600 in the money right now.
You know what's crazy?
I can't believe I sold them. Like, I'm so dumb for selling them.
You know the stock draft that we did?
Yeah.
I took Micron in it. Back on June 16th. It is the only thing saving me.
In the stock draft.
In the stock draft.
And you don't own it though.
And I don't own it. Look at
Man, that sucks.
Look at this. 6/16/2025. Look how many losers I picked, but Micron's up almost 600%.
Who would have guessed?
Who would have thought?
Yeah.
Meta, Microsoft, Netflix, Salesforce, and PayPal would have just double-digit losers.
I'm baffled by the way software is just being sold off. I'm baffled. Like, I don't know. I do know why, but like, it's a weird time to be in because the market is selling software to buy they're selling everything to buy semiconductors. Like, it's crazy.
And you know what this shows me? That you can probably do better instead of going heavy into one company, at least for me. If you just split across 10 companies that you think is going to do well, is maybe you hit a winner. I got one that's up 570%. Amit's got two that are up over 200% in his.
Yeah.
Matt's got one that's up 350%, and then one that's up 100%. Like, he's the true space mob here.
Oh, well, ABCL is at $3 right now, $5 right now. They're actually reporting. I think they're reporting on Wednesday or Tuesday. I forget which day. So that's going to be interesting. That's something Arnie's in, I think. But as far as the memory stocks goes, I was in a couple of memory stocks, which are not your Microns or SanDisks or Western Digitals. These were suppliers to memory companies. One of them was ACLS. That has basically doubled. And the other one was SIMO. I'm not in those anymore. I wish I was, but those have gone vertical. So if you look up ACLS, actually, I'll pull it up. I'll pull up my chart.
I'll pull it up. It's fine.
Okay. Yeah. Look up ACLS. I don't know what it's trading at today, but it's basically double from their last earnings. And I thought their last earnings were horrendous. So, but look at this thing. It's $166. So this company is basically like your baby Applied Materials, right? They specifically focus on ion implantation for memory companies. And they're the leader in that specific niche within memory suppliers. Applied Materials is in it, but Applied Materials is like more in the whole part of providing machinery and supplies to semiconductors in general. Yeah, I know. I saw that post earlier, Austin. I don't know how SoFi's doing right
now. They're not doing anything. They're at six. Whoops, hit the wrong button. That's Sorry, fine. Sam. SoFi is not doing anything. They are 2%. They're 1607. Yeah. I don't even know if this company is primary bid.
I did a little bit of research on them. So during COVID, they got a big boost of funds from a lot of companies' investments. They're basically a UK company, and they've helped company go like IPO. So like similar to your banks that help companies go into IPO and stuff. And they did that in the UK. SoFi was partnered with them back in 2024, and I guess that partnership turned into a takeover bid. So I would not be surprised if SoFi gets into the IPO market, which they already are, but deeper into the IPO market, but more on the international scale. So I think the angle with this is actually pretty smart for SoFi, because there's a lot of companies, like we don't know what kind of companies they're going to help IPO because they are buying all of Primary Bid's assets. But if they do focus on infrastructure, there's a lot of data center companies in Europe that they could be part of with IPO. And if they fund the IPO, they basically fund all the shares before it goes IPO, and then these stocks double. SoFi gets a big cut. And this is why a lot of companies push for IPOs, because these banks make a lot of money on it, right? So if they funded Cerebras at like $80 and it goes IPO and closed at $240, and they end up selling all of their shares to the open market at $240, like they just basically made like a 3 times in their stock or on their shares, right? I don't think that's exactly how it works, because I'm not a financial person, but I think this is actually a smart move for SoFi. Obviously the market doesn't think so, because if you look at all of fintech is getting just killed. Shift4 is making a new 52-week low today. All right. Toast. I was bullish Toast for a while. I got out like $38 when it broke the 200-day moving average a while ago. But like, look at this thing. Like, I don't know why Toast is getting sold off, but look, it's a fintech problem. This is not an issue with these companies. AFRM is actually doing pretty well, surprisingly. I did look a little bit into their earnings. They actually had really good earnings last week. But anyways, and look at that. The Qs are back at 714 intraday high. Like, these dips are just
with oil flirting with 100 a barrel.
Yeah. Oh, it's at $100 right now?
Well, it was a 97 a couple minutes ago.
Oh, yeah. Dude, I mean, the market's...
And now Michael Burry is buying Mercado Libre.
I saw that. I was like, I posted the other, I'm like, I don't know if that makes me bullish or bearish now, because he only... like, should I be worried? This is the same guy that's shorting the software of AI, right? And shorted NVIDIA and is now underwater by like 30%, even more in those puts that probably expire at the end of the year. Like, do I really want this guy to buy my company right now? Like, I don't know. But Mercado Libre is a great company. I'm not going to lie. It's a monster company. I have not added to it because it goes against my rules of adding to falling knives. So I have not added to it. It's crazy how this is making new 52-week lows today. But the market is very worried about their margin compression. My argument is that, look, the reason why that their margins are compressing is the same reason my Grab's incentives went higher. It's a fuel issue. Guess what happens when oil comes down? These will come back, but like, you got to have balls of steel to hold on to these companies, right? So that's something that, emerging markets is just not doing good. Thoughts on AppLovin? Where's that at today? I mean, that chart is still bullish. This is a result of, I hate to give like this default answer all the time, but look, the market is selling everything to buy semis and energy right now.
Yeah.
It's egregious, but that's just what's happening right now.
At the same time, you have the largest hyperscalers putting so much toward CapEx, and it does not seem to be slowing down. Taiwan Semi would not be building more fabs. Micron would not be building more fabs if there wasn't more demand in the future. We're not peak demand yet. And they're the ones that have the greatest insight into what is going to happen based on the orders coming in from NVIDIA, AMD, and Broadcom. If they're expanding CapEx at the rates that they are, I have to say that this is at least a 3 to 5 year, maybe 5 to 7 year cycle. They're not going to spend tens of billions more in CapEx just for a 1 year demand cycle. This is going to be, in my opinion, more exhausted than it feels. I don't even think it feels exhausted. A lot of people are calling for a top. We haven't even seen humanoid robotics or FSD enter the picture yet when it comes to what is on the table. I don't even know that we are near the end of the data center build out. Nope. That's why I'm sticking with NVIDIA. They're just, to me, the gold standard.
So I have another chart. I share this stuff in X. Like a lot of my research is on X.
Yeah, if you're not following Sam, he posts a lot of stuff on X. You guys should absolutely follow him.
So I posted this last April 26th, right? And this is from BlackRock. Look at the estimates as of the mega cap earnings, 31% year-over-year growth for CapEx, 31% next year. So we had 31, and we're going to have a 31 again. Then we're going to reaccelerate to 34% the year after that. I think these 25%, 19%, I think that is low. I don't think they're going to continue to accelerate in 2029, 2030, but I think it's still going to be high. And I do think that this $800 billion in CapEx, I think it's going to be close to $1 trillion by 2028, which means there is a lot of upside for these companies. So you have Micron and Samsung and SK Hynix. They're getting locked in contracts from hyperscalers for like 5 months, 5 years of supply, right? So they're reaching into their pockets and paying for it up front so they can lock in today's prices. Like that's what these hyperscalers are doing. Now, that's probably not the way you want to see, because then that means that, look, if they buy out the next 5 years, then where's the earnings growth after the next few quarters once it gets priced in? I don't think that Jensen Huang and all the CEOs of these memory companies are that dumb enough to not see that. I do think they're very smart in how they're going to do their financial engineering. And I think that this is going to fuel the bear case, which unfortunately is propelling the stocks higher. But I mean, you got that chart. There's also the where did I have it? Okay, so there's also NVIDIA. So they're reporting next Wednesday, right? They've accelerated revenue for the last 3 quarters. Like, look at this massive acceleration. People are like, this is the top, this is the top, this is the top. And look at last quarter for data center, and look at 2 quarters ago, look at last quarter. This is insane. This is like a small cap, mid cap stock. But no, this is a $5 trillion plus company. What do you think is going to happen next quarter?
Oh, you're going to see guidance off the charts, I think.
Yep.
I really do. NVIDIA is, when you look at what AMD did, when you look at, I think the number was 54 or 56% of their revenue came from AI data centers.
Yeah. Yeah.
There's no way that if and this is what that tells me. NVIDIA is fully subscribed. So people are picking up the chips that they can get their hands on, and that's rolling down to AMD and Broadcom. NVIDIA is just launching Vera Rubin now. There is no way that we're going to see a steep drop off. If anything, we're going to have another quarter or two of acceleration.
Yeah, man. And I'm going to talk about Everpure in a second, or previously known as Pure Storage. And the reason why that thing is running, it's mostly because of the memory play.
Oh, I asked Jason about that this weekend because he was talking to me about rack space. And I told him we actually used to use, I asked him about Pure Storage for a very specific reason.
Mm-hmm. Mm-hmm. Yeah. So, well, let me bring up this chart first, and then I'll talk about Pure Storage, because a lot of people are probably wondering why that thing is up so much. It's because Stock Talk bought it. Not just kidding around, or maybe I'm not. But anyways, and Shai bought it too. Got to give Shai credit on that one. So check out this chart. Shared this last weekend.
Yep.
Right. This is your share of electricity used by data centers set to increase 3 times by 2030 energy. Right here. This is accelerating. This is accelerating. Right. So a lot of the data plays have been very obvious, but I don't think that run is over. I think it's going to continue because there's a lot of names on this list that I provided that are in the energy sector. You don't have to buy every single one or whatever. I'm not in all of these guys. I'm only in a couple of them. Yeah, I'm in a couple of them. And I'm looking to get more exposure, right? There's other companies that I'm looking at that, one, might be something that has been overlooked for a while because it's been in a massive drawdown, and they are accelerating an energy battery storage segment that they have not really been focusing too much on, and they're expecting like 20% plus growth next year, which is pretty interesting because that might have been the bottom of that stock. And then there's also another stock that I'm looking into in the energy segment, but I'll be posting about that stuff anyway. But obviously not going to not going to say everything, but because I'm not even in it yet. So I would have to get in it before I even say anything. But either way, like I haven't pulled the trigger yet, but I am looking for more energy exposure. But like these are some names that are doing very well. This is Capstone is a popular is a popular OTC company that a lot of people were very bullish on last week. And where's it at today? It is still at $10. So I'm avoiding OTC, but like this thing had a major pop last week. And when that happened, I was like, oh, I don't know if I'm going to be in this one anymore. Anyways, I'll get into EviPure. So EviPure used to be named Pure Storage. Ticker symbol used to be PTSG. And they don't build these, the hard disk themselves. They don't fabricate any memory chips or anything. They basically build storage arrays. And the reason why storage arrays are pretty important is because they have a lot of redundancy and they increase a lot of throughput by basically displacing, RAID. Yeah. So basically displacing a lot of disks in one whole rack. So that way it's like if a server is writing to like just one disk, it'll depend on the read-write throughput of that one disk. But if you have an entire array, then it's like writing to each one of them in separate partitions. And then you also have parity, which is basically backing up whatever and displaced across the entire array. Anyways, this has been something that's been used for a while, but they're doing it at a very large scale. And the reason why this is important is because everyone's been focusing on HBM because these are the memory stacks that are integrated on the actual chips themselves. But when you think about either SRAM or NAND, NAND, right? Flash memory and so on, which is what's in your phones and everything. This is important too, because not only you're writing static memory, but you're also doing it very fast and very quickly to the point where, look, now you have a lot of dynamic memory available, but now you actually need to store this memory onto a drive. But that drive needs to be accessible very quickly due to the amount of inference that's being used on it, right? So inference has been something looked at more in the edge scale, but now we need to start thinking about the on-device scale, right? So running these models locally in devices, which means a lot of reading and writing on your disk themselves. And that's where EviPure come in by creating those storage arrays for companies. Now, it's a $90 stock now, which is crazy. So either someone knows something or everyone's aping into this thing. But this is a really good company. I wouldn't be surprised this is over $100 soon. But I'm not in this one big, and I don't really call things out because Stock Talk is in it. So I'm not gonna be like, hey guys, I call this out even though Stock Talk was in it, but like this thing is just running. So that one's doing pretty good. The company name was EviPure. Someone said at 10:46 a.m. EviPure, my time. Ticker symbol is P. If you search that on Twitter, like everyone's talking about it right now, but that's the reason why that one's running. But yeah, man, I just threw a lot at you, and I was supposed to be on for a couple minutes, and
all good. Love hearing you talk about it. As you follow the tech side a lot, I think that the viewers really enjoyed it. It's a great amount of information that you provided. And look, the reality is that this isn't stopping. Can we get a pullback? Yes. As a CPI tomorrow, can that give us a 3% down day? Maybe. But long term, we're set up to do well. And there's a lot of macroeconomic factors that we have to look at. There's also a lot of realistic factors that, regardless of oil being over 100, that's not stopping anybody from spending money on CapEx. That's not stopping the investment cycle. And we have not seen the investment cycle really start on enterprises with tokens. You will see tokens as a line item in budgets that you will always have variance reports going forward on. That will be an embedded line item the same way that you have your headcount or anything else on.
It's amazing because I think people need to watch the interview with Arkady Veloz that I've been like posting like 5 or 6 clips about all weekend. And I don't just post the stuff because like, oh, this is really cool. I like this guy. I own a lot of this stock. So I'm a cheerleader, right? No, because everything he's saying is like what's been reiterated everywhere, right? He spent like 5 or 10 minutes talking about tokenization and how like that's the next wave, right? So what you do is you do more research on tokenization, companies that are building toward that. And those are the companies you might need to look to buy, right? That is how you take this and implement it into your research by getting ahead of that, right? So I've been trying to do some research on that, but I feel like I'm already in it. I'm already in Nebius, and they're a large contributor toward that. So you can find that on my X, but I also have links to the actual interview. So when you think of tokenization, like this is basically part of the whole inference, right? The more inference you're doing, the more models you're running all the time is the more tokens you're using. And like you have to end up paying Anthropic or ChatGPT that amount of money, right? And I mean, Anthropic 88 times in 1 quarter, like it looks like a lot of people using tokens, I'm guessing. Like, I don't know, I'm just guessing. But even in Hyperliquid, Anthropic is like almost $1 trillion, which is probably the reason why you're seeing all these other data center stocks going. Like the private market knows about it, they're sniffing it out and they're buying it. And that's what's bringing it back up. And yeah, I mean, I don't know why NVIDIA is still $220. Like this should be a $250 stock.
I agree. And thank you, Pedro. Really appreciate it.
Yeah.
We're in the midst of a 2023 NVIDIA moment, but it's expanded to memory and data centers. I absolutely agree. Chels, thank you for putting Sam's X account. Please follow Sam. And I'm going to leave everybody with this, that
Yes, sir.
May 20th, NVIDIA reports. It is going to be very important, but there are other things that we have to look at, and keep this in mind. Regardless if we go up or down from here, in the long term, the markets are likely to go higher because we are likely to see corporate earnings expand. And we are at the very beginning. When you look at where cloud was, cloud has been a thing for more than a decade now, and companies are still getting on the cloud bandwagon. AI has a very long runway, and this can broaden out to many other companies, including the financials. There's a lot of places to look, and my own personal opinion is that this is nowhere near over. Now, I don't know if it's going to go down tomorrow or over the next week, but for the long term, when I see the development that these companies are putting out there, there's a lot of alpha to be had, and I'm picking spots. My spots are probably more conservative than a lot of other people, but I do believe, and I agree, this feels like an NVIDIA 2023 moment when ChatGPT came out. I just don't think that we've seen the last of this. That's all.
Which is crazy to think about, because 2023, we were still in the 20% drawdown in the NASDAQ. And I remember how loud the bears were during that time. I bought NVIDIA in like March during that banking crisis situation with SVB. And I still remember just how many people were so bearish. And it's unimaginable because we were still in a drawdown during that time. But today we're at all-time highs and no one believes it. No one believes it. It's like, guys, it's right in front of you, right? People are losing jobs. Companies are getting ahead of, like, it's not like jobs are being replaced by AI today, but companies are already finding efficiencies using AI that they don't need to have all of this bloated headcount that they had since COVID, right? So it's a lot of bloated headcount that's getting terminated. And they're not like, it's not like they're not going to hire these people back, but they're probably going to hire people back, but it's going to be in specific job skills that they're looking for versus the gloat that's been around for a while. And I do think that that's probably going to continue, unfortunately. And it sucks because it's like people have to lose their jobs and everything. But like from the stock market perspective, guys, like this is, you got to invest in what you really believe in, and just don't buy stocks that your favorite YouTuber or Twitter person buys. Like, do the research and get the conviction, because when that pullback inevitably happens and you're buying today and you don't really know two things about your company, you're going to get shaken out, and then it's going to bounce. And then you're going to be like, oh, damn, I shouldn't have sold that stock. But if you did the research and you understood things, you would not have sold NVIDIA at $192 the other week. You would have still held it today and been up like 20%, right? So that's why you need to do your research, build your conviction, own it, and don't worry about the next couple of weeks of moves. Just make sure the thesis does not break. Wait for those earnings, see what prints out, see if they're growing on the specific sectors you're looking into them growing. Make sure the gross margins don't contract for the wrong reasons. Make sure they're gaining market share, all that stuff. That is what you should be doing, not looking at charts, buying calls that expire 2 weeks from now and they're getting shaken out.
Yep. So we're going to end it there. Very important what Sam said. Just because somebody on YouTube or somewhere else likes a stock, that does not mean it's going to go up. just because Sam or I like a stock does not mean it's going to go up. So do your own research. Sam, what time are you going on?
I'm probably going to go on in an hour.
Okay.
But I'm going to be doing the Nebius earnings Wednesday morning. So make sure you tune in live. My YouTube is youtube.com/@Sam_Badawi. So whatever you see here in my caption is the same thing you have for youtube.com. But yeah, guys, Monday through Thursday, 2:45 p.m. For an hour about, I think, whenever they have like a big earnings or something, I usually don't go live during that time that day. I usually go live, but I'll say it on Twitter. But yeah, man, hopefully the Dallas one, I'll probably see you there. Or Dallas or Houston, whatever the Texas one is, I'm definitely going to that one.
Yep, I will be there. All right, everyone. Thank you very much for tuning in. I will be live tomorrow at 11:30 a.m. I will be live later tonight also. Sam will be live in about an hour. Thank you, everybody, for joining. Really appreciate it. Have a great rest of the day.
See you, Steve.
Later, Sam.